Okay, welcome to my new YouTube page, The Price Action is Right, named after The Price is Right. I guess that's all I could really come up with, so hope you think it's kind of humorous, because usually the price action is right. All right, so let's talk about what happened on Friday, and let's relate it to what happened today on Monday, because that's usually what price action is. Is like we're trying to take the context of the previous day to help us previous days and time periods to understand the current day. So what happened is on Friday we had a very large rally, and here's Friday, the 5th, and here's Thursday. So Thursday we came down, and Friday we rallied all the way up. So it was a pretty good bull day and helped offset some of the damage from these previous 3 days. All right, so let's go to a 5-minute chart. So so here is Friday, and what happened? We have the market opened right here, and I'm sorry, the market opened here and then it rallied, or it sold off. I'm sorry, and then a huge rally throughout the day. It broke all the way up through, the high, the open and the high of the open of the day, and all the way up through that. And so what happened is because of this big rally on Friday, what happened today is we had consolidation. And what I mean by consolidation is that, we're above, Monday opened up here. Here we are, and we're above Friday. So the market's held its gains. So that's kind of an important thing. Large decline, large rally through the open and all the way through the open. So we have a really powerful rally, okay? And then we consolidate today. So let's go back and look at stuff at a 5-minute level from today. So here's the open, 8:30, and what we see is right off the bat we have just a lot of back and forth trading. And usually what's happening is the market is trying to find which direction it wants to go. So it races down, races all the way back up, comes down again. And so we're spitting out buyers and sellers, and they're battling back and forth until they find a direction. And that's pretty common in the first half hour of trading. That's just kind of the way it works usually. And it's probably more volatile now because of the action's been a little more two-sided the last couple weeks. But so finally we get to 9 o'clock, and we have this big bull bar. And then we finally break above the open of the day, and we break above a little bear bar, bigger green bar, and then finally we have a red bear bar. And so, like I was saying before, what's going on is that we're probably running out of steam from the large rally from Friday. Because you think about it, we had a huge rally. It opens on its highs or above where it opened, and then we're trying to rally again, and we're just running out of gas. And that's pretty much what happened. So we have this green bar, and then we have this. It's important to understand we have this long red bear bar. Okay, and remember, these candles, when they come all the way down and they're really full and they're large, it means selling all the way down. So that's enough to sort of not necessarily stop this rally, but it's enough to probably pause it for a little bit and get people's attention. And so then we get some more evidence afterwards that things might be paused. We have an inside bar. See, this green bar is inside the red bar. And then we have another bar that's a little bit larger, but it's still inside this red bar. So we're just sort of now consolidating. We haven't, the important thing is that we didn't have any bulls down here that immediately bought and drove the market up way past this bar. And so what happens is that we start to get more evidence that the bears are kind of out there, and this is kind of easy to understand. We start to see these shaved tops on top of the bars. Okay, so that means that bears are selling up in here, and it's causing these wicks to form, and that's what they're doing. They're selling. These wicks are forming, these wicks are forming. And that doesn't necessarily mean the market's going to just, stop or, it's just a warning sign. There's pressure building. Selling pressure is building in here. And you can see we haven't made a new high. We're just pressure is coming. So there's one more attempt here, weak attempt, and the bulls fail. Okay, they're thinking it's going to go up here, and it's failed. And they probably failed because there was too much pressure, from these bears in here. And this should have been probably a bit of a warning that that this might not work out. So what happens is the market declines, has a very weak decline. Okay, it comes out this bottom. Here's a bottom here of this range, and sells off. Nothing major though. And then it has, but the momentum's low. So we have this tiny little bar, and then this, the lows are very, very, they're not going way past. Each bar isn't opening up and shooting way down like this. They're just a lot of overlapping, very gradual decline until finally you see it bottom again here, consolidate bottom, and then we have one more attempt to go back and make a new high. Well, what happened is that we could maybe say this is one attempt, two attempts, three attempts, roughly, maybe in four attempts. And so what happened is after the fourth attempt, usually one time to make a top isn't going to be enough to slow down the market. Two is better, and then three, maybe four, is going to give you a much higher likely odds that this is a firmer top. And so that's what happens is, so we see when this selling pressure starts, it's much more dramatic. So you have big bull bar, a little bull bar, but then a little bear bar, but then these bear bars, look, they're just nothing but selling almost all the way down. And this one opens up on the bottom right here. There's no overlapping. Just as soon as this bar closes, this bar opens, it drops right down. And same thing, this thing. They close on their lows, and then next bar just immediately starts dropping. So that's a sign of really big momentum. So momentum is really shifted, and it's easy to tell from this. I mean, you just see nothing but red stacked on, and there's no the bars don't overlap. Okay, and then so we have a weak rally and sell off in a weak rally. So the key is understand is that we probably just consolidated from Friday, and but this is a good example of how multiple attempts to drive the market higher usually results in a more dramatic sell-off, and like it did today, and then it finally comes down and it actually closes below the low of the day. So that's probably a little bit bearish for tomorrow. All right, so that's it. Thanks for watching.